My name is Michael Odundo. I'm an Equities Research Analyst at Standard Investment Bank. More specifically, I cover banking stocks listed on the Nairobi Securities Exchange. In the second quarter of the year, the market closed lower, down 21.3% compared to a 6.4% decline in the first quarter of the year. Zooming in on the last month of the second quarter, that's the month of June, we saw a decline of 3.3% compared to a drop of 14.3% in the month of May. And this was largely due to a shift of funds by investors. We saw investors liquidating their holdings as they react to the changing macroeconomic environment in which interest rates were rising, which were occasioned by the higher global inflation. Hence, we saw quite some outflows largely on the large caps. However, we saw investors take opportunity of these low attractive prices, and we've seen a rebound in the start of July. In the leading movers list, we had our usual large caps, and this is a list which encompasses the most traded counters by turnover. Leading the list was Safaricom, followed by Equity Bank, KCB, EABL. These are counters that have quite some foreign participation. And given the changes in the macroeconomic environment globally, where we saw a rise in global inflation, which in turn led to different central banks around the globe increasing their interest rates, some even hiking higher than expected, we saw increased activity on these counters. Notably, all top movers posted declines, with Safaricom being the leading laggard in the top movers list, down 29.4%. But this is largely on the macroeconomic environment and not on a change in the fundamentals of the company. We also saw a company like BAT posting double-digit losses. This decline really underscored the impact of the changing macroeconomic environments on the listed equities. In the top gainers list for the second quarter of the year, we had at the very top was Samia Africa, followed by TPS Serena, followed by East African Portland Cement, Crown Paints, and among others. Notably, we had TPS Serena posting a gain of 17.9% and Crown Paints posting a gain of 15.3%. TPS Serena, within the quarter, they announced that there will be a conversion of debt to equity by the major shareholder, that's the Aga Khan Fund, and this conversion is to be done at a price higher than the market price. Additionally, on Crown Paints, we saw the company announce their full year earnings, in which they posted an improvement in their revenues, they posted an improvement in their profits. They announced a dividend of around 4 Kenya shillings, which was offering a div yield of around 10%, even at elevated prices of around 40 Kenya shillings of the share price, and hence we saw the company feature in the top gainers list. Here is the top losers list, and among the top was Safaricom, Kind General, WPP Scan Group. Safaricom led the loss, declining to 29.4%, and as we said earlier, this was largely due to the macroeconomic factors, investors shifting their funds to other higher yielding assets which they consider less risky. However, we have seen the counter rebound, almost recover all the losses in the first 2 weeks of July. It's back up 28.4% despite the 29.4% decline in the second quarter. On Kaya in general, we saw a decline post-bonus issue and post-dividend book closure. We generally see declines in the prices of shares. The ongoing conflict in Ukraine has and is still affecting the local equities market. The initial impact was seen in the first quarter around February and March, when we saw quite some outflows. Immediately, Russia invaded Ukraine. In the second quarter of the year, and investors are pricing this in, they're also pricing in the impact of these rising global prices on the consumer spending and in turn on the company's earnings. This has provided a ripe opportunity for investors, and we've seen investors snatch up the attractive prices, future capital gains, and we've already started seeing counters come up. We currently have buy recommendations on Safaricom, some select banking stocks such as Equity Bank, KCB, Absa Bank, Stanchart, and CBA. We also have buy recommendations on EABL, Centum, and Kengen. On the banking sector, we began to see improved profitability, and this was in their full year earnings and in their first quarter earnings, and they appear to be shaking off the impact of the COVID-19 pandemic.